Okay, so welcome everybody to our webinar. We are excited to have you here. Needless to say, it is pretty tumultuous times with the coronavirus and states of emergency being declared in many states here in the US and the impact it's had abroad. So we thought we'd put together this quick webinar around how to navigate through this Black Swan event with some offense, some defense, and most importantly, speed. For those of you who don't know about our firm, ProfitLink is, we provide CFO advisory and crypto accounting primarily for the blockchain space and companies that accept cryptocurrency as well as tech companies. We like to say we help tech companies have as much confidence in their numbers as they do in their code. So today's, you're going to have the joint pleasure of talking with both of us. Mel Comer is my partner at ProfitLink. Mel has the CPA and has received a certification from the AI CPA in blockchain and cryptocurrencies. I'm Anna Masker. I've had ProfitLink or Profit Point Consulting primarily for about 13 years, doing CFO and consulting services, newer to the blockchain space, but also have a certification from MIT in blockchain technologies. So I'm going to turn it over to Mel, and Mel will take it from here and bring you into some of the content. We're going to run about 45 minutes or so, and then we'll wrap up after that. Okay, Mel, you got that?
Great, I've got it. Thanks, Anna. I'll jump in here, and before we go into what a Black Swan event is, I just want to say again, join Anna in welcoming you to this, and also really talk about the goal for this is for you, the small business owner, the CEO, the startup. This is really about trying to find some rational thinking, trying to find some calmness in the middle of this chaotic storm with so much in the press and so much unknown. Is what are the things that you can take away from this? And hopefully it'll be a deep breath and feeling like, okay, I know what I need to do now. So what we want to start with is what we're seeing in the marketplace. Now, some folks have called this a Black Swan event, and you know, just to refresh you, the Black Swan theory, or theory of a Black Swan event, is really, it's a metaphor that's used to describe an event that comes as a surprise, has a major effect, and is often inappropriately rationalized after the fact with the benefit of hindsight. So the question is, to me, whether or not this eventually holds up as future classification as a Black Swan event because of, you know, how they categorize it. To me, there's little doubt that there is an unprecedented impact on our economy and all of our businesses. So, you know, again, regardless of what it gets called, we really need to think through strategically how we want to manage through this. And around the Black Swan event, I just want to kind of give you a couple of headlines and thoughts from some of the people in the investment community about this, is just to reflect for a second that, because again, in hindsight, I'm not sure it will be a Black Swan event, because when you look at some of the other financial indicators over the course of time, was the economy bound to hit a bump? Okay. For example, last July, 9 months ago, the economic expansion that has became the longest in the U.S. history. It passed 120 months, and you know, so the question is, how much longer could that go on? And again, you know, maybe longer, maybe not. Goldman Sachs talking about, you know, they see a bull market ending, and they see a bear market. And I think we dipped into bear market territory the other day. Double hit the other day on the market was coronavirus and the oil market disruption, with a spat between Russia, who's seeing some opportunities in the marketplace to really mess us up, and OPEC, who wants to really just keep managing supply to keep the price of oil high, and Russia wants to dump a lot of oil. So as the global market strategist mentions there, our end of cycle dashboard signals are flashing. And then, you know, kind of a little bit of good news sifting through this is a JP Morgan analyst saying, you know, that they think that if we do go into recession, that, you know, there's no reason why we can't come out of it fairly quickly, comparing this to, at least at this point, having people feel as though this is not as bad as the 2008 collapse, when the entire financial system, you know, nearly collapsed. So, you know, we'll keep our fingers crossed and hope that that's the case. You know, but in terms of the real impact that we're seeing is some real life, very significant impact. So for example, just this past week, you know, first it was Facebook, Twitter, and Amazon who canceled showing up at South by Southwest. Then Apple, Netflix, Nine Inch Nails also pulled out. And then after that, eventually, the South by Southwest committee decided to cancel it just days before the opening. And in terms of impact in the area, the economic impact, just a couple of facts. Last year, Austin had a $356 million spend in their community. They had over 417,000 visitors, okay? So it's not hard to imagine a city which I've read is really like hosting the Super Bowl in your city every year. So this really big influx of people, but also influx of spending. And it's just gone, you know, after they've already made significant investments this year. So, and think of the ripple effect. I mean, that's really the important thing, is like, you know, obviously the stuff that's quite clear: airlines, hotel, transportation, Uber, restaurants, production houses, tech support, talent, the list goes on, immediate impact. But think about the secondary impacts of people who didn't get to Austin. You know, all of those startups and emerging tech who are expecting to use the event as a launch platform to gain exposure. You know, deal pitches that aren't going to happen. Speakers with really interesting things to say, not getting their message out at the same volume that you would have coming out of South by Southwest. You know, exhibitors who can't show off what their products are. Think of all the intellectual property that just isn't going to get shared in the same way as if South by Southwest happened. And then think of the connections that people going expected to make. You know, investors show up at South by Southwest. Customers of yours show up there. Future partners, potential employees show up there. So it is going to have a profound short-term effect and long-term effect. And that's really the point of looking at something as dramatic as South by Southwest. Anna, why don't you jump in on Sequoia and what we're reading in those communities?
Yeah, so the impact what's the impact really on VC and the investment community in general? And, you know, Sequoia Capital put out a memo last week that really warned its portfolio company founders, like, you really need to take a look at your assumptions. They called this coronavirus the Black Swan, hence where we got the name of this webinar from, because, you know, they see some serious signs when it comes to startups and capital raising, and they really focused on really 6 points that really, when you look at them from a high level, they all have financial impacts. You know, first of all, looking at the cash runway and your assumptions around cash, how long you think it's going to last, what the impact is going to be on fundraising. Are things going to slow down? Are you going to get favorable terms? Really taking a look at your sales forecast, because that is truly, you know, one of the leading indicators of how you're going to weather the storm, what you're spending on marketing and customer acquisition, really looking at your headcount, what needs to be, you know, do you need to have so many people on board, or do you need to take a look at, are you know, spending ahead of where your cash is going to take you, as well as the capital spending that you have planned. So that's really kind of the Sequoia Capital memo. People are saying, are they being too doomsday-ish? They also issued a memo back in 2008 called the end of good times, I believe it was, and really predicting kind of the impact the financial market crash in 2008 was going to have, and they were pretty spot on. So I think it's worth it to look at this Sequoia Capital memo. We'll put a link in the follow-up email that we'll send with this, but it's a pretty interesting take on what's going on. So what's the impact on VCs? Well, you know, it's still a little bit new. Most VCs, of course, have restricted in-person meetings. Most are doing pitch presentations virtually. And this has a downside impact because most deals, most relationships are made in person, right? If you're getting an investor, they're going to be on your board for about 10 years. They probably want to start that engagement with an in-person meeting and develop that relationship. So that will slow down. Deal velocity is expected to slow as well. You know, they're going to be a lot more cautious. The VCs themselves are impacted on their ability to fundraise because it's directly tied to market performance. So their investors that invest in the VCs are also feeling the squeeze and have maybe potentially some liquidity issues. So they VCs have their own issues raising capital. So therefore, if they're having issues raising capital, they're going to be a lot more stringent over who they're sending, who they're writing checks to. That will then lead to deal terms being more favorable for the VCs versus the competition. More favorable for the VCs because there's going to be fewer players in the market now. The VC market was really hot up until this crash, but now with fewer players writing checks, the terms are now switching more favorable in the favor of the VCs. And then, you know, you also have to take into consideration your the perception of your company with the VCs. So if you're spending a lot of cash, you're going to be seen as increasingly risky. We're going to talk about, Mel's going to talk about some of the strategies to take advantage of this, but we're kind of laying up what the environment is as from what we've seen all in, you know, the course of this week or this last couple weeks as it's leading up to these events in the last couple of days. You know, the other thing you need to take into consideration is you may want to take on that additional capital because we don't know when or how liquid the market is going to be or when your next round will be coming. So you don't want to run out of cash before your next round. So that's kind of the impact on, you know, from VCs, a VC perspective.
So now the question is, what can you do? Okay, because now we get to the good part. We start talking about you and your business. Okay, so but imagine if you had your own South by Southwest cancellation, okay, whatever that means in your business. So, you know, the questions would be, as we saw looking at some of the fact patterns with South by Southwest, or what are the disruptions in your ecosystem? Okay, so the industry, the category, the type of work you do, what do you really, in a short-term basis, see as disruptions likely to have an impact on your business? Okay, and then take it one step further out. What are the disruptions further downstream? What are they in your customers' ecosystems? For example, if a lot of your work is funded by, say, the marketing budget in a larger company, you know, those marketing budgets typically are the first areas that get slashed, okay? Or maybe it's a project that isn't going to come online for some period of time. Well, people may start to say, you know what, let's push the pause button on that. So the key here is for you to start thinking of, like, what if I had my own South by Southwest experience? What would I feel? What would I start to see? What would I feel? What are the impacts? And then further downstream, start to understand the immediate and the secondary impacts. So, you know, to me, the most critical thing is to take action. So, you know, not to just, I mean, it's difficult in a moment of chaos, is that where you feel as though you just want to take a breath and kind of see how things start to land. You can't afford that. So we call this kind of a offense, defense, and speed, but also known as our 3 Ps: plan, preserve, and proactivity. And plan is really, you know, the first part of your good offense is what's your cash plan? You're going to hear us talk about cash a lot because, as you know, that's the lifeblood of your business. So, you know, in simplest terms, what you want to do is you want to keep the money coming in, no doubt about that, okay? And then you want to maximize that by having a combination of, you know, staying close to your clients and your customers, close to your numbers, your financials, and then close to your funding sources. So another theme that you're going to hear from us today, besides take action, it's also going to be communication, okay? Talk to your customers, talk to your clients, pick up the phone, ask them how they're doing, ask them what they're seeing happening in their market, okay? How are their employees doing? What are they doing to manage their team? What are they doing to manage their particular situations? Share what you're seeing, share your ideas, because I think having open dialogues, open lines of communication with key people, your key constituents, either, you know, people putting money in or taking money out of your business, it's really going to help you understand some of those more nuanced trends. And then maybe, you know, that could give you the edge in terms of jumping on an opportunity further. Okay. What you also need as part of your cash, the next step down is your sales pipeline. Okay. What's that look like? Okay. And you really you want to monitor this closely. You probably think you already do. But if you do, I say monitor it even more closely, because you want to look for signs that your close rates are starting to lengthen, okay? Or that the close rates are dropping, the number of hits you get in terms of inquiries and so on. So you want to be aware of that, okay? Because you have to really, obviously your receivables, your sales convert to receivables, which convert to cash. You want to be out in front of, if you're not selling, you're not going to get cash in. You want to really be able to have a fine, you know, your finger on the pulse of what that looks like. You know, another area that I think people don't pay enough attention to is accounts receivable, okay? And really to be proactive with that. And that also helps you when you're having those conversations with your customers. If you're starting to hear they're in distress, then you know that may impact you, okay? So you want to be cognizant of the fact that if they're getting squeezed, that means you may get squeezed as well. But you also want to be able to work with them and come up with some kind of arrangement, because I think if you're having that initial conversation with them before things really tighten, you may be able to get some of your receivables cleaned up before, you know, their well runs dry. And, you know, it's because, face it, customers or typically what customers do is they look at you as if you're their financing arm, okay? So they'll let their receivables run late instead of going to the bank and borrowing the money. And it means you have to then borrow the money. So you don't want that challenge, okay? And borrowing, okay, that's another area. If you have an existing line of credit, you know, understand what your current balance is, what the rate is, what your terms are, what your loan covenants are. Those are really critically important. You want to talk to your banker. That's another person you should be talking to hear what they're saying, to get a sense of, are they getting nervous? Are they going to look to tighten some of the terms? And you also want to make sure that in those conversations, you let them know you're being proactive, you're on top of this. In the loan covenant area, where we see people getting tripped up is that oftentimes the covenants relate to accounts receivable and what's current and what's beyond 90 days that they don't want to lend on. So you want to know that if your loan line of credit is going to dry up because you don't have enough receivables to support the level that you need, you want to get out ahead of that. You know, as Anna talked about before, if you're expecting any VC money coming in, okay, I think it's reasonable to expect that's going to take longer and be harder to close those deals. So therefore, communication with investors. Keep those lines of communications open. Take the opportunity to remind them you're on top of this and you are taking action to make sure that your business remains as vibrant as as you've presented to them in the past. Most importantly, though, is these are all things you need to know, but do you have the financials and the forecasts that tell you the things you need to know? And that's another thing that we see is like, you know, sometimes we have to wrangle down clients to make them listen to us about their monthly financials, but we do it. We have an ongoing, dedicated, you know, once a month or once every 2 weeks, we're on the phone having a conversation, a Zoom meeting, an in-person meeting with them to help keep them focused on the business. And really, those become very important, not so much your financials, absolutely, but the forecasts are, that's your view out the front window as opposed to your financials, which are the view out the rear view mirror, which are not as helpful. You need to know that the people who are managing your finance team or your outside accountant is really giving you the information, arms you with that information that makes you smarter and able to make better decisions quickly. In terms of the next part, which is incredibly important, is are your people, okay? What's your people plan? And this to me is one of my favorite quotes. Maya Angelou said, people will forget what you said, people will forget what you did, but people will never forget how you made them feel. And what's important about that is that you need to be a leader for them because there's so much in the news and there's so much on TV. They know you, your team knows you, and they look to you now as a leader, and they will be looking to you as a leader now, and they may not get it from the local mayor, the governor, the president, whoever, but if you can give them some certainty, if you can give them some comfort, that is going to be incredibly valuable to them. They're going to feel like, okay, we're all in this together, it's going to be fine. So, you know, and you think about you're facing disruptions, you're working from home, or your kid's school is closed, or you know, an important meeting got canceled. Those are your challenges, and realize that all your employees, every one of your team probably has that same stress, if not greater, okay? So you can look to provide leadership and guidance to them and get them to kind of calm down. You need to be empathetic and flexible because, you know, at the end of the day, as I said before, our team, that's our most valuable asset. And what you do now in the hard times and in the critical times of chaos really will have an impact on them for a long time. And so you want them to feel like I've got your back, they've got my back, and that when times get tough, we all, you know, that everyone sticks together, they're dedicated, they're not distracted, and they're willing to pull out all the stops to get through the crisis. And so, you know, having a policy on how we work from home, okay, what are the things you need to do as a leader to help them manage that successfully, okay? What technology do they need? What kind of flexibility do they need? You know, not getting on them if you hear a dog barking in the background or a child crying, you know, now's the time to, again, be flexible and empathetic. Another part of the offense is planning for opportunities, because that to me is a really exciting area, is that sense of, you know, there's going to be opportunities that come up that I don't even know about them, but if you're not looking or expecting them or trying to use those opportunities, trying to take advantage of them, you're going to miss them, okay? And the opportunities really, I'd say, start like on the internal side. Think about what the internal opportunities are. Now, some of those are positive and some of those are a little harder. For example, you know, typically in a down market, you know, it's uncomfortable to really have a conversation or start thinking about, do you need to downsize, okay? Downturns, you know, are really the opportunity to start making those tough decisions that in good times you could overlook, you could put off, you could delay, you could ignore, okay? But now you really have to look at your team in a way that, you know, is a little more surgical and just think that, you know, you may need to cut some employees who are underperforming. You know, everyone has someone like that, and it's been easy to keep them on, but maybe it's time to let them go. You know, or people who aren't the right fit, or people who have grown in skills that aren't critical to your business anymore. So I think the trick there is thinking about that, getting ahead of it, understanding the things you need to do. And then, you know, I think treating people with respect and dignity and fairness is what you need to do. It makes a impossibly difficult situation maybe a little bit easier, and then you need to move on. You know, do the best you can at that, and then move on and keep looking forward. You need to evaluate some of your internal projects. Okay, you may be working on developing something that you think is going to be amazing, but it's a year off. Well, is now the best time to continue pouring money in? It may be, but I think it's time to really look at all of your options and really more realistically and very rationally evaluate them. If you have the cash, if you have the discipline, if you have the team in place to get you to where you need to be. External opportunities are really fun as well, because, you know, you get a chance to think outside the box. And, you know, the typical things you probably should be looking at right away are stealing market share from a competitor, maybe acquiring a competitor, you know, because if somebody, you know, this is a time where strong companies tend to continue on and gain in strength, and weak companies, a downturn certainly exposes that weakness and makes it very hard for them to continue, which presents those opportunities. Another great opportunity in a down market is to find talent that wasn't available before, okay? So if you've had your eye on someone, what I would say is have conversations with them. You know, you aren't necessarily trying to lure them in a very open way, but just, you know, establish those lines of communication. Show them that you're thinking about the business in a positive way, that you're thinking about what the opportunities are as opposed to what all the challenges are. And that's a pretty interesting conversation for somebody who's very talented, because they want to go where somebody's looking forward and not backwards. You may be able to recognize a way to solve a business problem you never thought of before. You know, kind of like when the tide goes out, you see things on the beach you didn't see before. Well, keep your eyes open, you know, be prepared, be thinking about what's happening, what are the pain points in businesses, is this something I can, really move on. And you know, much the same, and again, a lot of this is common sense, so I'm not sure that these are any particularly patentable thoughts on our part, but it's really being prepared. It's thinking beyond the crisis. You know, businesses that really do well are the ones who had cash put aside so they could use that cash in a down market and take advantage of opportunities.
Yeah, and Mel, can I just jump in here for a second?
Sure.
I mean,
Yeah, please.
I think one of the biggest things, you know, that I think everybody in the small business world, it's a fight for talent. And I think this is, one of the biggest opportunities of this downturn is the ability that talent is now going to become available that wasn't available before at a price point that potentially you can afford, you know. So your competitors who might not be as financially strong as you will be shedding employees. It's a great time to pick up some good talent that's going to get you through the hump.
Yeah, for sure, Anna. And, you know, they may not shed the A players right away, but if you see them starting to shed, the A players are wondering when their time is coming up. So I think you can really probably, you know, snare some good talent that way by just keeping your eye on what's going on in the marketplace. Next, so we move from offense, okay, to defense, okay? And so what do we need to preserve? And we really think of it in three buckets. Cash, as we talked about before. We'll talk a little bit about some of the strategies. Culture, okay, how you take care of your team, you have to preserve that. And relationships, absolutely critical. So, you know, in terms of cash, it's really some of the things we talked about. How do you, on the one hand, cash coming in, you want to maximize. How do you minimize the cash going out, okay? And that's, you know, it's challenging, but if you break it down into pieces, it doesn't seem so overwhelming. You know, you look at your monthly expenses and you start with like, what are my fixed costs? Okay. Rent. Okay. Typically pretty fixed. You've got a lease that you can't get out of. Okay. Okay, great. But let me think about, what if I had to? What would I do? So a lot of this strategy here is thinking about all of the different ways you can manage, all of the levers you can pull in your business, okay? And a big one is around expenses. The what ifs, okay? What if I didn't need to rent this? What if my payroll was smaller? What if I reprioritized some of the work I was doing? What if I found more cost-effective ways to do A, B, and C? And it really gives you the opportunity to start turning over every rock and seeing what you can find. Now, some of the things that then you have to prioritize, because some of the things you think like, well, I could save money there, but you have to understand what the implications are. And, you know, is that a first thing to go, or is that a last thing to go? So, you know, just be thinking about all those variables. Write them down, make a list, come back and revisit them. The key here is when you preserve things, around preserving is you're re-examining what the true value is of each thing you're spending money on. And what seemed like a good thing to spend money on last month may not be. Do you need those subscriptions? Is that really paying off? Let me look at the ROI on these activities. And do those activities still make sense anymore? Okay, so look at all of those things. Culture, okay, as we talked about before, keeping your team intact, strengthening the bonds that you have with them, critically important. And I submit it's easier to cement your culture in times where you struggle. Okay, if you have the right people around you, it is typically people bond over, you know, intense experiences, and I think this is probably going to be one of those. So be mindful of how you're treating your people. And last are relationships, as we talked about. Communicate, and communicate some more. Your relationships with your banker, your investors, your clients, your suppliers, and of course your team. Critically important to have those conversations. Reassure them, let them know, find out more information. I can't emphasize it enough. Talk to people. You are not alone. And the last area we really want to talk about is speed, okay? Because being proactive is the most important thing. Take a deep breath, gather some facts, do something, okay? Do something today, tomorrow, next week. You really need to game out those what if scenarios. What if this happens? What would I do? What if that happens? What if I cut this? What if I got that? What if I invested in this? And really be ready at any point in time, you know, 3 things in the top of your head all the time of like, what would I do if? And then I think that better prepares you as the events change, opportunities come your way, challenges are presented to you. Definitely, you should be thinking about, again, what you need to do today, and, you know, short term, midterm, and long term. You know, you don't go out a year, but, you know, what next month will bring, what 3 months from now will bring, what your business is going to look like. And so, you know, I think that now that we've kind of laid out in, you know, a lot of detail, you know, just kind of trying to hone it down and prioritize things, we came up with a list of profit link suggestions, okay? And no surprise here, communicate is one of them. I'll just reemphasize that if you are the clear, rational voice in the chaos, okay, and you project leadership, people are going to notice that. People are attracted to and feel comfortable around someone who's a leader. And, you know, whether that's your banker, your investors for sure, or your you know, your team, that's, you know, I can't emphasize that enough. You know, the next thing I think about is getting the details, okay? What do I mean by details? I think details are your best friend, okay? And what to do with those details. So, you know, the more information you have, the better in terms of what's happening in the market. How are your employees feeling? What are your investors thinking? What are they seeing? What are your competitors doing? Okay. Getting a 360-degree view of your ecosystem is going to be very valuable to you. You probably do that already. But, you know, I think being more mindful about it and being more clear on what you're trying to get out of that, what information is going to be important to you. And then, you know, the big part of the details are how up to date and informative are your current financials and projections? You know, again, are you just getting these, you know, this information that you really don't pay attention to, or do you use those as really actionable insights in your business? Because it makes a huge difference. I mean, what we try to emphasize with our clients is that, you know, as much as most people aren't really numbers people, your financials are telling you a story, okay? And you need to be paying attention to that. And your projections are probably the most important thing you should be looking at now. So, you know, we'll talk a little bit more about that. And then the third thing is act, you know, come up with a plan, make a decision, move on, reevaluate, make the next decision, and so on. Don't be paralyzed.
Right. And Mel, can I jump in here for a second?
Sure, absolutely.
Going back to the ACT, I think one of the things that we found works really well with our clients as we're working through some of these situations is really having an action plan and, you know, with defined goals, defined activities, but also, you know, we use Trello pretty religiously for our project management. But more importantly, it's setting a weekly meeting and strictly focusing on this, managing through these tumultuous times, trying to figure out, you know, once you do that planning, like you said, putting pen to paper and actually making, you know, decisions and then sticking by them and then monitoring progress against them. So when it comes to acting, that includes putting together the plan.
Exactly. Thanks, Anna. Thank you. You know, and so we also, as I mentioned, you know, want to spend a little bit more time thinking about cash, the value of projections, and an action plan. And, you know, cash, we've talked a lot about this in the past few minutes, is that it is the lifeblood of your business. I'll repeat that. And you need to be laser focused on cash and cash preservation. Because as we mentioned, capital raises may or may not be happening. Credit may or may not tighten and cost more. So having a cash forecast, understanding your burn rate is critically important. And as part of that, what you need to do is to look at your projections, okay? So that goes beyond cash. That goes, well, it all flows through cash. But basically, what are all the components of your business? What are your what do your sales look like? You know, what are your costs? Are they going up? Are they going down? What are your receivables? How long are they taking to collect? What kind of deals can you work on the payable side to delay as long as you can on payments? Those are all important things to consider when you're looking at projections. And one of the things that we have conversations often with our clients about is they sometimes have challenges valuing a projection. You know, what we often hear is, you know, these things are wrong as soon as the ink dries or before the ink is dry on the paper. And we're like, yeah, you're right, they will be. The value of doing a projection isn't necessarily that it's going to be 100% right, because none of us have a crystal ball. But the value is really in the strategic conversations you have around putting that together. Because what that tells me is you're having that conversation with your team of, if we expect to do X, what do we need to do to get there, okay? So you're talking about all of the steps and process in your business to create value, okay? And by having that, the discipline of putting together a projection, you know, a budget, it ensures that you're having those conversations around what the underlying strategy is. again, we call it, the learnings are in the gap. So for example, you miss a projection, okay? That's okay. But the value becomes not just saying, yeah, we missed it, so what? But we missed it because of what? Why did we miss it, okay? Is it because your projection was bad? You were overly optimistic about your sales? That tells you something. You were overly optimistic about your costs? Tells you something else. Or you just didn't deliver. Your execution was bad. Your numbers would have been fine. You just couldn't execute for whatever reason. So running a business is constantly balancing an ever-changing landscape. And again, in this type of market, that is wildly exacerbated. And the last, as Anna talked about, is creating an action plan. Write down your action plan for each scenario, what your best case is, what the catastrophic scenario is, and then something in between. And I guarantee you, this will help you think through future action steps that you need to take, because you have already discussed them. They're in your head someplace. So having that discipline, I think, will help you be prepared to act quickly when you need to with the next set of circumstances as they unveil themselves. And most importantly, guess what? Your investors are going to be asking you the same questions, okay? So why not be prepared with a really smart answer and a set of steps that you're going to take, and then get their feedback, learn, adjust, and keep going. And, just to recap, again, plan, preserve, and proactivity. Again, cash and people, your two, I might put that, people are your best asset. They're probably a little more forgiving than cash, but cash, you either have it or you don't. Your people and what you do about them and to inspire and motivate them, you've got more opportunity to change that than you do whether you have money in the bank or not. Preserve, again, maximize your cash. Find ways to accelerate income, put off expenses, and part of that is having that map, that plan, that projection of where you need to be and when. And that way you can check in on are you doing the things you need to do? Do you need to take additional actions, or can you now redirect some opportunities? And retaining your culture. That's we talked about that, again, incredibly important. Proactivity, act now. Don't be paralyzed. Have a plan, have the facts, understand the implications, and act.
Great. Thank you, Mel, so much. I think that was super informative. I know lots and lots of information in there. So what we'll do is we will send all registrants a recording of this after we wrap up today. But we've also put together a planning tip sheet for this kind of black swan or volatile market that we're in. If you want to email us at planningtips@profitlink.com, we will send that over to you as well. Or again, if you need any helps or have any questions about navigating through these challenges, if you need help with cash flow forecasting, putting together projections, or even bouncing ideas around as far as a strategy to help navigate this, we are here to help you guys. So please reach out to us. The contact information is here right on the slide, but you can always reach out to us at hello@ProfitLink, our website, or the phone number below that'll connect you with me. But thank you all so much for joining us on this webinar. I hope you found it helpful. We'd love your feedback, but please reach out if we can help you in any way. Thanks so much. Have a great afternoon, evening, or morning, depending on where you are. But we appreciate you spending the time with us today.